Welcome to Journey to Rich Mindset, your pathway to financial growth. Here, we turn challenges into opportunities, learn building financial foundations and generating passive income. Ready to your money? Subscribe and join us. Stay tuned for our next segment on financial freedom. Have you ever dreamed of living off your investments? Imagine this: waking up whenever you want, no boss to report to, no traffic to fight. Your days are yours plan, filled with hobbies, travel, or family time. The possibilities are endless. Curious about how this is achievable? The secret is in the power of smart investment decisions. By strategically investing, you can build a substantial nest egg that works tirelessly for you, growing continuously. It's not just accumulating wealth, it's developing a sustainable income that can support your lifestyle and dreams. The joy of watching your wealth expand is immense. Each dollar is a soldier in your financial army, fighting for your ideal life. This is not a fantasy, but a reality for many who chose a life not defined by labor, but by smart money management. Investing isn't a game of chance. It demands knowledge, patience, and discipline. It's deciphering market trends, diversifying your portfolio, taking calculated risks, and reaping rewards leading to financial independence. Welcome to the world of financial freedom. Embarking on this journey requires a blueprint, a detailed plan to build and grow your wealth. It's not just a guideline, it's the roadmap to your financial success. It's a well-crafted guide leading you step by step towards your wealth goals. The first step is building a solid financial foundation. Think of it as the base for your financial house. It must be durable, capable of withstanding any financial storms. Clearing high-interest debt is the first task. It's a financial drain, and removing it should be a priority. Doing this liberates more income for investing, freeing you from creditors. Next, construct an emergency fund. Life's unpredictable, and this safety net offers peace and stability during emergencies. This fund should cover at least 3 to 6 months of living expenses, protecting against unexpected costs or income loss. Ensuring a steady income stream is crucial. This might mean having stable employment, a side business, or income-producing assets. With reliable income, future planning becomes possible, as it supports your financial ambitions. With this strong foundation, you're ready for investing. This is when you start seeing your wealth grow as your investments generate returns. The journey to wealth accumulation may seem long and arduous, but with the right blueprint, it's a journey you're more than capable of making. Aligning your investment goals with your overall financial objectives is critical. This principle forms the basis of productive financial planning and dictates your financial decisions. It's the link between your current status and your future aspirations. Consider this: you wouldn't embark on a trip without knowing your final destination, would you? The same logic applies to your financial journey. Your investment goals, like a compass, guide your portfolio through the fluctuating tides of the financial market. Your dreams, whether they involve retiring early to travel or living free of financial stress, shape your investment approach. They influence the kind of investments you make, the risk you're willing to take, and the time frame for achieving your goals. Imagine your financial future. Is it bustling city life in a high-end condo or a serene existence in a country cottage? Or maybe it's about securing your loved one's future. Whatever it is, your investment strategy paints this picture. Remember, the world of finance doesn't support a one-size-fits-all approach. It's about aligning your personal financial goals with your investment plans. Financial success isn't a straight road, but with the right strategy, you can create a clear path. Your goals dictate your investment strategy. Exploring different investment options is the third step. In this dynamic financial world, numerous investment choices can help fulfill your financial aspirations. The first to consider is stocks. Stocks are shares in a company's ownership and a claim on its assets and earnings. They are quite flexible, potentially offering high returns, but can be erratic, presenting certain risks. Next, we contemplate real estate. This involves buying property to generate income through rent or future resale. Real estate can offer steady income and significant appreciation, but it demands proactive management and significant initial capital. Bonds are conservative investments where you lend money to an entity, usually a corporation or government, who agrees to repay you with interest after a set period. Bonds lower risk but offer lesser returns. Apart from these, there are other options such as mutual funds, index funds, ETFs, commodities, and more. You might consider investing in startups, small businesses, or even unconventional assets like art or antiques. Each investment vehicle has unique dynamics like risk, liquidity, profitability, and tax implications that ought to be understood thoroughly. It's crucial to remember that the best investment options for you depend largely on your individual financial goals, as well as your risk tolerance and investment horizon. Each has its own risk and reward profile, so it's essential to understand how they align with your financial goals and risk tolerance. Mastering asset allocation and portfolio diversification is the fourth step. Let's understand this concept. Asset allocation is about diversifying your investment portfolio among different asset classes. Think, if you were a gardener, would you plant only one type of seed? Unlikely. You'd aim for a diverse, vibrant garden. As an investor, you want a similar diversity in your portfolio. Stocks, bonds, real estate, and cash are some of the asset classes you could consider. Each class entails a different level of risk and return. For example, stocks are often high risk, high return, while bonds are lower risk with lower returns. Real estate is relatively stable, but requires a hefty initial investment and cash, although the most liquid asset typically provides the least returns. The goal of diversification is to spread the risk, to strike a balance between maximizing returns and minimizing potential loss. By diversifying your investments, you safeguard against market volatility. Market conditions fluctuate, and some sectors may fare better than others at different times. Diversification ensures you're not overly reliant on any one sector's performance. Remember, diversification is ongoing. It requires regular review and adjustments. As the saying goes, don't put all your eggs in one basket. Grasping the power of compounding is the fifth step, a concept so important that Albert Einstein reportedly termed it the world's eighth wonder. But what does it entail? Compounding originates from the Latin term componere, meaning to assemble. In finance, it's likened to a snowball rolling down a hill, expanding continuously as it descends. Imagine investing in a mutual fund yielding a fixed annual return. By year end, you have your original investment plus the interest. This is where compounding's magic comes into play. In subsequent years, you earn interest not just on your initial investment, but also on the prior year's interest. This cycle of yielding returns on returns is compounding. With each passing year, your investment multiplies exponentially, not linearly. Compounding, however, needs two elements: time and reinvesting your profits. By leaving your investment in the system and allowing interest to accrue, you stimulate the compounding cycle. It's often deemed the secret ingredient in finance, transforming your hard-earned money into a formidable nest egg. By reinvesting your profits, you earn returns on returns, leading to considerable wealth growth with time, a phenomenon that can convert modest savings into a significant wealth pile. Developing a resilient mindset is the sixth step in our journey. These words are straightforward, but they hold a profound significance. It's about braving the stormy winds of market fluctuations, an inherent part of the investment world. Envision yourself as a sailor, navigating your ship, your investment, across the market's vast ocean. Sometimes the sea is tranquil, reflecting your investment's steady growth. At other times, it's disturbed by violent winds, mirroring market volatility. This unpredictability is a reality all investors must face. So how to navigate this? Some may panic at the first sign of trouble, opting to abandon ship. Others, however, choose to endure the storm, trusting in their vessel's strength. Here, a resilient mindset is crucial. It's about staying calm during market fluctuations, amid the waves of uncertainty. Cultivating a resilient mindset involves learning from past experiences, understanding market trends, making informed decisions, and not allowing fear to guide your actions. It's about building mental toughness, unwavering confidence in your decisions, and a steadfast belief in your investment strategy. Market volatility is part of the investment journey. They are the tides that could either sink or sail your ship. It's up to you how these tides affect you. The key lies in adaptability, resilience, and maintaining balance amid turmoil. Being able to keep your cool when the market is volatile can be the difference between success and failure. This, dear investors, is the importance of developing a resilient mindset. Creating passive income streams is the final step. It's a phase that comes after diligent planning, smart investing, and disciplined saving. This is when your investments become not just a display of numbers and charts, but a reliable source of passive income. The year of financial independence is marked by a shift, a transition from working for income to your money working for you. It's a point of evolution where your finances grow due to the income streams you've carefully developed. This transition is what classifies creating passive income streams as the final step in your financial journey. Now let's examine the types of passive income. This income could be dividends from consistent, impressive performing companies. These firms share a part of their profits as dividends, creating a steady cash flow. Alternatively, you might have opted for real estate, with rent from tenants as another passive income avenue. Whether it's one property or several, the rent collected can serve as a steady income source. Or you might have chosen bonds, a safer option for many. Here, your passive income comes as regular fixed interest from these bonds. This is the ultimate goal, to have your investments work for you. It's the moment of financial stability and freedom. It's the moment when financial success isn't just a dream, but a reality, thanks to the passive income streams you've successfully created. To recap, the financial freedom blueprint involves laying a firm financial groundwork as a significant stride towards achieving monetary stability. This method demands establishing a resilient savings and investment base capable of withstanding any fiscal turbulence. This is then followed by aligning your investment objectives with your overarching targets. Venturing into various investment avenues is the next phase. The spectrum spans stocks, bonds, real estate, among others. It necessitates comprehensive insight into each potential avenue, their upsides, downsides, and the inherent risk level. Subsequently, mastering the art of asset allocation and portfolio diversification is essential. Distributing your investments across varied asset categories minimizes the overall investment risk. Understanding the potency of compounding is also crucial. The principle is simple. The sooner you begin investing, the more time your money has to multiply. Further, cultivating a robust mindset is cardinal. Enduring the financial freedom expedition, which often entails highs and lows, with an optimistic attitude is vital for success. Lastly, developing passive income streams which generate revenue with minimal daily effort is a key step. Such streams lend support to your financial stability and bring in extra income over time. This blueprint is not a get-rich-quick scheme. It involves patience, discipline, and a clear understanding of the financial markets. But with the right approach and mindset, it's a proven path to financial freedom. So, are you ready to take the first step? Voiceover. As we proceed towards the end of this video, let's briefly address some common queries regarding financial freedom. Question 1. Is financial freedom just about wealth? It's more about having sufficient savings and investments to afford your desired lifestyle and living without constant financial stress. Question 2. How can I invest with a minimal income? Begin modestly. A small amount can yield substantial returns over time due to compounding. Consider options that don't demand a large initial investment and utilize automated investment apps for small amounts. Question 3. Am I too late to start investing? It's never too late. While starting early is advantageous for growth, beginning now is crucial. It's about time in the market, not timing the market. Question 4. How do I cultivate resilience? Embrace financial ups and downs as part of the journey. Stay focused on long-term goals, adapt to new financial trends, and keep learning. Remember, your journey to financial freedom is your own, not a race, but a marathon. Educate yourself, be patient and disciplined, and make informed decisions. With the right approach, you can attain financial freedom. Keep the questions coming, and let's continue to learn and grow together.